Alrighty, good morning, everyone. Good morning. Hope you guys are doing well. Today is Tuesday, January the 6th. It's crazy that we're already in 2026, by the way. But yeah, hope you guys are doing well. Well, let's go over some charts, some indices, and of course, some tech names here in a bit. As for the overall markets today, no red folder news. Yesterday, we had an inside bar day here on the QQQ. As for the SPY chart, we end up having a nice push above its previous day highs, but really not too much to talk about on the tech side. Of course, as I mentioned, we will head on to some names here in a second. Before we do that, what's up, everyone? Good morning. Good morning, Victor, B. Roots, Andreas. Good morning, Wayne, Cody, Robert, Hartik. Good morning, 50, J, Deuce, Cinna, Frank, Juan. Good morning, everyone. I am KO, Lamed, Kang Tone. What's up, everyone? Yeah. Good morning. Hope you guys are doing well. Let's head on to the major indices, and then we'll head on to some tech names here in a second. Let's first start off on the ES. So let's go into the hourly chart. As you can see right here, for the overall markets, the ES has been a little bit more bullish than the QQQ. And of course, lately the SMH and even the IWM has been showing a lot more strength than the rest of the indices. So let's first start off on the ES here. Let's turn back on the levels that we have drawn out. So coming into today, the key levels that we're going to have drawn out here is essentially going to be this Friday's highs of last week. So as you can see, Friday, we had a pretty big range. Yesterday, we ended up driving towards the upside coming into market open. We ended up opening above our Friday's highs. Now you can see buyers are trying to step in above our Friday's highs, which is key. So coming into market open, today, as long as you can maintain above your Friday's highs, basically similar game plan as yesterday, we like to see this continue push back towards the upside here in the markets. Another possible scenario, of course, is going to be now above our previous day highs, which is our 6960 for this continuation higher. So as I mentioned, the ES is a little bit more bullish than the NQ. And we'll kind of talk about the other indices here in a second. So these are the two long scenarios for the overall market today. It's going to be off of, as I mentioned, your Friday's highs, 6936, or it's going to be above our previous day highs. The only way I'm leaning a little bit more towards the downside is if we can break underneath. Now it's going to be that previous day lows underneath that 6936. If we do break underneath this level, I am going to lean a little bit more towards the downside here on the ES, but that's only, as I mentioned, if you can have a really strong push towards the downside, hold underneath this 69.36 for this push back down in towards the next key level on the chart, which would be that 69.12. So these are the key levels I have for the ES coming to market open. If you go on to the SPY chart, the key levels that we have is virtually the same thing. What we have here is your Friday's highs marked out. You can see Friday we had a pretty big range yesterday. Nice push towards the upside coming into market open. Now moving forward, the exact same levels are going to apply. So as long as you can maintain above that Friday's highs, we can expect this to continue back towards the upside. Another possible long is now going to either be above our 688.50 or now above our previous day highs, 689.50 for continuation higher. As for shorts, as I mentioned, I'm really only interested in shorts here on the indices underneath that Friday's highs, and now it's going to be underneath that previous day lows. So key level for me is going to be that 686.50 coming into market open here, which is that previous day lows along with our Friday's high. So these are the levels that we have for the SPY coming into market open. Let's keep an eye out on this. As I mentioned, there's really more long scenarios. Short scenarios are only applicable underneath that previous day lows. Now let's head on to the NQ. So for the NQ chart, you can see this one is a little bit more neutral compared to the ES. If we're drawing this out, you can see this is our Friday's range from last week. Yesterday, we had an inside bar day, which was expected just because we had a pretty big range from Friday. So coming into today, Really, what we're going to mark out is now just going to be our previous day highs, our previous day lows, and we have some other levels marked out here as well. So coming to market open, as you can see yesterday, we tried getting above your Monday's lows from last week, was not able to. Another touch here in the pre-market, and now you can see another touch once again. If we do want to see upside today, we're going to have to break back above our Monday's lows from last week, which in this case is our 25.6, basically our 25.650 for this continuation up in towards our last week's highs, which is our 25.800. So this is a key level for the NQ coming to market open. Another possible scenario is going to be longs above our previous day highs. Very similar level. It's basically that 25.650, or you can mark out your previous day highs here as well. As for some shorts, there's actually a couple scenarios here for some downside, either that pop and fade off of that key level that we rejected from yesterday, or now it's going to be underneath our previous day lows, or 25.550. As you can see, there's a lot of levels here on the NQ. That's why we're just kind of inside of a range. They're not as clear. So let's go on to the QQQ. As for the QQQ, you can see we have a bunch of levels. We're just kind of in between our Friday's range, as I mentioned. Similar thing here to the NQ. So it's a little bit trickier to trade inside of this Friday's range. If you do want to see upside coming into market open, two scenarios here for the QQQ. The break above our 619.50 for continuation higher, or now above our previous day highs for that continuation up and towards that 622. As I mentioned, for the Qs, there's not really too much going on until we can break outside of its previous day's range. And then, of course, until we can break outside of our Friday's range, it's going to be a little bit more difficult to trade. If we're looking for some downside, either the rejection off that 619, or now it's going to be underneath that previous day lows, that 617 for that continuation down in towards that 614. So this is what we have for the QQQ today. The Qs isn't as clear, right? We kind of talked about this. If you go into the daily time frame, the Qs has been consolidating. So if you're trading any of the tech names the past really 20 to 40 sessions, it's been fairly difficult. The reason being is because we've been just stuck inside of this range. We haven't really had a clear direction on specifically tech names. On inside of the QQQ, the SPY has had a nice push towards your all-time highs, right? SMH is leading the markets. IWM is pushing up nicely as well. But really for the QQQ in itself, we've just been primarily ranging. So we've been ranging, we've been kind of forming this higher time frame pattern. And until we can break outside of this consolidation period, right, we can expect the Qs to be a little bit more rangy and not have, right, a clear direction, specifically on the higher time frame. So this is what we have on the QQQ. As I mentioned, there's really not too much to talk about until we can finally break outside this range. We're just going to be a little bit more cautious on anything inside of tech. If we go on to the SMH, this is the Semiconductor ETF. As you can see right here, we're building up these higher lows. And now we're finally breaking above our all-time highs. Yesterday, we had a nice gap up that got sold into, but the higher time frame is still very much bullish. And we can expect, as long as we can maintain above our 372, we can expect this continuation higher. So if we go back onto the SMH, key levels that we're going to have marked out is going to be that previous day highs. So we have that previous day highs. You can also mark out, let's actually kind of refine this level here now. We can mark out our previous day highs. We can also mark out our high that we created here from Friday. And you can see the SMH buyers stepped in right off a key level. And now we're continuing back towards the upside. So for the SMH, this is the Semiconductor ETF, as I mentioned. So anything within the semis, anything that has to do with semiconductors like Nvidia, AMD, MU, TSM, all these names, right, are leading the markets higher just because we've had a really strong push on the SMH. So for the SMH coming into market open, what you're going to keep an eye out on is a couple scenarios, either the bounce off your previous day lows, 377 for this continuation towards the upside, or the break above our previous day highs, 384. So two long scenarios, you're going to be more higher, you're going to be more bullish based off the higher time frames on SMH, and you can expect majority of the dips to be bought up. Shorts are really only in play underneath their previous day lows, and of course I'd be a lot more cautious on shorts just because we are higher time frame bullish. So this is what we have for the SMH. I'll go into the IWM, and then we'll go on to a few other tickers here as well. As for the IWM, we're reclaiming back above key levels. So IWM, you can see a lot of these small caps have been moving nicely. Some of these high beta names have been moving up nicer, like SoFi. A couple other names we'll kind of talk about here as well. But for the IWM, the key level that we have marked out is this previous all-time highs. If you're looking at this on the daily time frame perspective, you can see touch here, broke above, tried reclaiming it here, broke back underneath. But if you can reclaim back above our 252, we can expect this to continue back towards our all-time highs. So coming into today here for the IWM, the key levels that we're going to have marked out, as you can see right here, 252. That is going to be our key level moving forward. So if you go back onto the hourly chart, now what we like to see here for the IWM is the hold of our 252. You can see we have multiple touches. Once we broke back underneath, we had to push towards the downside. But yesterday, really strong push higher. Now what we like to see here is the base above our 252. If we can do that, we can see a push back up and towards our previous day highs and potentially our 255, which is a higher time frame key level. So really, these are the scenarios that we have coming into market open today. Let's keep an eye out on this for the IWM in specific. Okay, now let's go on to some tech names that we have today. If you guys do have any charts or any tickers, you guys can now drop them in the chat. If you guys are enjoying this so far, I appreciate if you guys drop a like. If you guys haven't joined the free daily watch list, that of course is in the description below. All right, what's up, everyone? Good morning. Hope you guys are doing well. Let's head on to some tech names. May know this option. We're just marking out the underlying. So we're marking out the underlying. So this is just the stock in itself. When I go look to trade, there's different asset classes where you can trade stocks, options, futures. I primarily trade options and futures. But let's go on to some tech names here now as well. So let's first talk about Tesla. Tesla, not too much to talk about. A lot of these ones just in between its Friday's range. So most of these tech names, just because the QQQ was in between its Friday's range, most of these other tech names are also in between its Friday's range here as well. So what we have here is an inside bar day on most of these tickers. So you can just draw your Friday's range, and then you can just draw your previous day's range, and you can see most of these have what's called an inside bar day. So for Tesla coming into today, the key levels that we're going to have marked out, the exact same levels as yesterday. We haven't changed them. It's going to be that 455, and then we also have your 445. So key levels coming into today for Tesla. As I mentioned, it's going to be your 445 potential bounce off your previous day lows for a pushback towards the upside, or now it's going to be above our 455 for a push back up and towards our previous day highs and potentially above. So these are the two long scenarios I have for Tesla coming to market open. You're going to be open and playing both sides in the markets. And of course, the short scenarios, potential pop and fade off for 455, or now it's going to be underneath that 445 for that push down in towards that full gap fill towards the downside. So this is what we have for Tesla coming into market open. Be open to playing both sides. As I mentioned, overall QQQ is just consolidating, and you're going to be open and playing both sides, as long as there's any sort of relative strength or weakness. That's what you're going to keep an eye out on. Let's go into the semiconductors. So the semis, I was more focused on the semis coming into yesterday. Rejected right off our key area, so there's really no setups towards the upside on most of these tickers. But for Nvidia, as you can see, we're just consolidating. So consolidation inside of this range. We've just been consolidating. All right, we should be back. It seemed like my stream cut out for a second, but we should be back. If there is any audio issues or any video issues, you guys can just refresh the stream and it should be good. But as you can see here for Nvidia, we're just consolidating inside of this range, 193 and your 186. I'm still waiting for the break above our 193, which is going to be key. As you can see here on the higher time frames, until we can break above our 193, we're going to be a little bit more cautious. If you're looking at this on the higher time frames, right, the break above your 193 is going to be key for some more upside. Break back underneath, you can see a potential reversal. So for Nvidia, these are the levels that we're going to have marked out. Before then, we're just going to be a little bit more cautious. You can trade in between these ranges, but I'm not as interested in trading in between kind of your range between your 190, 192.50 along with your 186. You could be looking for mean reversions, but I'm really just waiting for that break above your 193. So that's what I'm going to be waiting for personally on Nvidia, unless we have a lot of relative strength on the lower time frames. I'm just going to be a little bit more cautious in between, as I mentioned, this range right here. This for me, I don't really want to participate in. As for AMD, the key levels that we have marked out is that 226. That was key for us, that 226 higher time frame key level. Ultimately, we ended up dropping right off the bat. And we ended up fading. We ended up gravitating back down and towards our previous day highs. We filled the gap that we created and we pushed all the way back towards the downside. So as you can see, if we're looking at this on the 15-minute time frame, pretty big day towards the downside yesterday on AMD. Higher time frame key level is still going to be this 225. The break above your 225 for continuation towards the upside is in play up and towards our 230. If we reject off your 225, we can see a push right back down in towards that 220. So for AMD, the key level here, 225 reaction coming into market open today. As for the semis, there's a couple semis still holding up. But for Nvidia and AMD kind of rejecting off key pivot levels, we're going to have to be a little bit more patient coming into market open. The only name that's still holding up and still looks good, we'll talk about MU and TSM here in a second. As for Apple, this one showing a little bit of relative weakness compared to the overall market. So yesterday, the overall markets basically bounced towards the upside. Apple, one that stayed quite heavy. You had that pop and fade on Friday. And then, of course, yesterday, underneath that previous day lows, later into the session, once we closed underneath, we had that nice push down in towards that 266. So for Apple moving forward, as you can see, we're just coming right back down into a key level of support. I do expect buyers to step in off this level. As you can see, multiple touches, touch here, touch here. I like to see the buyers step in and push right back towards the upside. So this is what we have for Apple coming into today, at least moving forward. If we break underneath this level, which is your 266, potentially you can see a little bit room lower. But I do expect, as I mentioned, the buyers to step in here off your 266. As for entries on the lower time frames, I'm not too interested in trading Apple. That's just based off the higher time frames. Intraday, Apple's been very hard to trade. As for Google, this one inside bar day here as well, just kind of back inside of this consolidation period. We have a couple levels here as well. So for Google moving forward, we like to see the bounce off your 216. Similar game plan to yesterday, the break back underneath that 316 for that continued push towards the downside. Not too much to talk about here. As for Meta, nice push up yesterday, but still in between essentially its previous day's range. So we had a pretty big move, but ultimately we're inside of its Friday's range. So moving forward here for Meta, we need to see the bounce off your 658, or now it's going to be above our 664 for continuation towards the upside. If we're looking at Amazon, this one, super nice bounce yesterday as well, but similar thing. We're still in between its previous day's range. We're going to need to see the break above our 233 for a push up and towards our 235.50 if you want to see any push higher. If we reject, we're going to come right back towards the downside. Microsoft, this one's staying heavy. So if you go into the daily time frame here, we'll keep an eye out on Microsoft just because the overall market is consolidating. Microsoft has been showing relative weakness, and the key level that we have here is that 470. So it still applies. If we bounce off your 470, we can see this mean reversion. If we break underneath, we can see this push down in towards your 460s and below. If you go into Netflix, this one showing relative weakness, kind of retesting this higher time frame key pivot level. So for Netflix moving forward, if you can get that potential pop and fade, or now it's going to be underneath that previous day lows, we can see a little bit more continuation towards the downside. So coming into today, the game plan, we'll kind of go over it here in a second, but overall, the market right here, as you can see on the QQQ, is in between its Friday's range. So what we have here is an inside bar day. We're going to build up liquidity to both sides, right? We have a tighter range here, so we're going to be a little bit more cautious until we can break outside of its previous day's range. And then for the rest of the major the rest of the tech names, you can see a lot of these ones had inside bar days. The only ones that didn't is Nvidia and AMD. Besides that, the rest of the names are basically just consolidating in between its Friday's range. So we're going to be a lot more cautious. I'm going to go on to a few other names that we'll take a look at here that have higher time frame breakouts. And we'll do that here now. So if you guys do have any charts or any tickers, you guys can now drop them in the chat. Let me answer some questions here as well. Yeah, if you guys do have any charts or any tickers, you guys can now drop them in the chat. If you guys are enjoying this so far, I appreciate if you guys drop a like. If you guys haven't joined the daily watch list, that of course is in the description below. Do your key levels automatically update for the weekly outlook chart? I tried, but it seemed like it didn't work. They should, but I think that was a while ago that I posted it. At least for the key levels, if you are in Circle and Traders Lab or Traders Edge, I post updated levels every single day. Of course, if you're in the accelerator, I have those pre-market charts as well in the JW alerts. After a bullish retest, if the candle if a bearish candle is quickly engulfed by a bullish candle forming within 15 to 10 seconds, can we wait? Yeah, so basically it's a 3-bar sequence. So let's say price is pulling back into a key level, and let's say this. You have your lead candle. So your first candle is called your lead candle. You have your second candle, which is called the reaction candle. And then the third candle is basically your confirmation candle. So as this candle is forming, if you wait for the candle to close, right, it could close all the way back at the highs. If you get in before the candle closes within the first 10 to 15 seconds, it could very much well flip and close bearish. So if you wait for the candle to close, right, that's going to give you the most confirmation. If you get in as the candle is forming, you are prone to fake out. So there's pros and cons to both, right? It's based off reading the tape, right? Sometimes if you get in before the candle closes, you can get faked out. If you wait for the candle to close, sometimes it's already going to be back at high of day. That just has to do based with experience, reading the tape, and there's also other things that go into it as well. But there's no right or wrong. A lot of people get in as the candle closes. A lot of people get in as soon as buyers step in above its previous candles. There's different ways. There's pros and cons to both. As for Palantir, key levels that we have coming into today is still going to be inside bar day. You can see classic inside bar day here on Palantir. Right, big day on Friday, and they have a very small inside day. So for Palantir coming into market open today, what you're just going to have marked out is going to be your previous day's range, and we have your Friday's range marked out. Right, break above our previous day's range, continuation higher. Break below, we can see a push down in towards our full gap fill. So this is what we have for Palantir coming into market open. Let's go on to Hood and SoFi. So a couple of these ones, nice bounces off the lows. Let's talk about this on the higher time frame. So as you can see, really major downtrend here in the overall markets. We're finding some buyers, some nice volume stepping in here as well on Hood and SoFi coming into yesterday. So coming into market open today, the key levels that we have marked out on Hood. As you can see, we just draw this higher time frame key point of interest, which is our 124. So for Hood, moving forward, what we like to see upside above our 124 for continuation. Another possible scenario, higher low bounce off your 121 for this continued push back towards the upside. So there's a couple scenarios that you could be looking for some upside on hood. That's going to be the key levels 124. As for SoFi, nice push towards the upside here as well. Kind of similar game plan. I do like SoFi quite a bit, right? It's been consolidating for a while, basing above its previous all-time highs level. I am very much bullish on this one. I have a bunch of shares, as you guys know. I just haven't talked about this in a while, but higher time frame base. It's only a matter of time before we have that kind of expanded move towards the upside, in my opinion. But for SoFi, key levels that we're going to have marked out, at least coming into today, is really going to be this 2970. That's going to be your previous day highs moving forward. You can kind of just draw this general area. If you do want to see some upside now, we end up having a nice push on Friday, nice push yesterday. We're going to need to see the first step be bought up. Now we could be looking for the break above our 2970s, or now it's going to be the break above our previous day highs for that continued push towards the upside here as well. So this is what we have for SoFi coming into market open today. Now let's go on to some of the tech names that we do have. So MU and at TSM, these ones really solid push towards the upside. Key levels that we have marked out is going to be your 314 and your 324. So as you can see yesterday, within the first really 5 to 15 minutes, we filled that gap towards the downside. Now moving forward here for MU, still very much bullish here. We came back down in towards this like 15-minute order block here on the higher time frames. What we like to see is really the hold above our 314 for a push back towards the upside. Another possible scenario here now, break above your pre-market highs for this continuation higher back up and towards your 324. If you look at TSM, this one super solid retest right off that high that we created here on Friday. So it came down all the way in towards our 322, exactly where buyers stepped in. And now you can see this nice gap up towards the previous day highs. So moving forward here on TSM, couple scenarios that we can be looking for. Number one, break above our previous day highs. Another possible scenario, kind of this pullback longs, and you're going to be looking for the reclaim back above your 331, or of course now it's going to be the bounce off your 321 for continuation higher. So this is what we have on TSM coming into today. If we're looking at Intel, this one really solid push higher. You can see pretty big kind of rejection right off our 42, which is a higher time frame key level. For Intel moving forward, at least, what we like to see is the hold above our 3980s. So our 3980s is going to be key. Maintain above that. We can see a push higher. It's going to be a little bit harder to trade a bunch of these right off the bat. You want to be a little bit more patient coming into market open just because of yesterday's price action. No red folder news today, of course. And then for the for the QQQ, we are in between its previous day's range. As for some other tickers, there's been some nice names that are pushing up higher. Something like OKLO bouncing off the lows here. That's pushing up nicely here in the pre-market. A lot of these like high beta name stocks are moving up nicely. That can have a couple mean reversions, right? Overall, tech has been lagging, so a lot of these names have been moving up nicely. If you're looking at these ones, they've been basing a while here as well. But at least for my game plan coming to market open, let me go on to that. And then I'll most likely get ready for market open here now. Let's see the gap and go versus gap fill. Gap fill is just, right, if you go on to the regular trading hours, you can see we have a gap in the markets. Majority of the times, if you're looking at the major indices, right, 70% of the time the gaps will fill within a 48-hour period. So at least for the major indices, a gap is just an imbalance in the market. So a lot of times markets will tend to fill those gaps. And then a gap and go is the complete opposite, where there's some sort of news catalyst, higher time frame breakout. Well, we'll have a gap and then we'll just continue higher. Something like, let's say, MU, for example, right? You can see a lot of these gaps, maybe it has to do with earnings. They have a gap. It's usually a breakaway gap, and then markets just continue higher. Okay, let me go over my game plan here. Personally, wait for candles closures. It just depends on context. Sometimes if you want to be a little bit more aggressive on the downside, I might not wait for the candles to close. If you're trading towards the upside, majority of the times, I'll probably wait for the candles to close. But downside, I'm going to be more aggressive. And sometimes if it taps a key level, I'm going to be a lot more aggressive, specifically on short setups. It's just a rule of thumb. Like sometimes it's more context based as well, right? If there's relative strength, maybe it's based off a key level or you have some sort of higher time frame thesis. There's a couple things to go about it. If you want the least amount of discretion as possible, then you're just going to be waiting for those candles to close. Okay. So for the game plan coming into market open here. So key levels, as I mentioned, we're just going to draw out our Friday's key levels. We have our Monday's key levels here as well. If you want to see upside above our 619, or it's going to be above our previous day highs, that's going to be for upside. I'm going to be a little bit more cautious just because we're opening up right in between its previous day's range and we're in between its Friday's range. But whenever we have an inside bar day, just understand whenever we do break outside of its previous day's range, it usually means we're going to have a bigger move here in the market. So that's something to keep an eye out on coming into market open. As for SPY, we're going to keep an eye out on your 686 bounce, or now it's going to be the reclaim back above your 688 for continuation. And then for my main watches coming into today, it's actually primarily the SPY and Qs themselves. I'm still very much interested here in Nvidia, but I'm going to be interested either that bounce off your 188 or it's going to be above your 193. As you can see, touch here, touch here, touch here. Once we break above that 193 and hold, we can see a nice push towards the upside. So we'll keep an eye out on Nvidia. As for AMD, I'm really only interested in AMD, the reclaim back above our 225 for continuation higher. And then the rest of the indices, the rest of the tech names, I'm not too interested in any other tech names here. A lot of these really are just kind of consolidating. So until we can break outside the ranges, something like Amazon break outside the range or even Meta break outside the range, I'm just going to be a little bit more cautious coming into today. A couple names with relative weakness, Netflix, Microsoft is weak here as well, but really the primary focus is going to be the QQQ inside bar day. And of course, we're going to take a look at Nvidia and AMD if we can reclaim back above key levels. As for some names with some higher time frame potential moves, we have Hood above our 124. SoFi, if you can get above our 2970s, and then some other semiconductors here as well are still intact, so we can keep an eye out on MU above our 314. TSM we'll keep an eye out on above our previous day highs. And then for Intel, this one, I'm going to be a little bit more cautious on Intel, but we'll basically fairly similar game plan coming to the market open today. We're just going to be waiting for that inside bar day to break, and then we're going to be looking for a clear direction in the markets. Let's see. Should you stay out of the market? What's an inside bar day? So you can see yesterday there wasn't too much opportunity just because we're inside of the Friday's range. If you're trading the QQQ on Friday, it was a lot more of a higher probability day than something like yesterday. So if the Qs is ranging, that means most of the rest of the tech names are ranging as well. So there really wasn't too much opportunity on the tech side. There's a couple scalps here and there, but there was really no clear direction on the overall indices. So now with it being an inside bar, we're just going to be waiting for now the inside bar. So which is going to be the break above your previous day highs for continuation. So that's what we have coming to market open. Kind of just laid out my game plan there. But yeah, I'm most likely going to get ready for the markets here now. If you guys did enjoy that, appreciate if you guys drop a like. If you guys haven't joined the daily watch list, that of course is in the description below. And with that being said, yeah, I'm going to get ready for market open here now, and I will see you guys all tomorrow. All right. Take care, everyone. Have a great rest of the day. Peace.